Welcome everyone to my recap that I'm doing today because Andrew is traveling. I'm going to recap both stocks that I traded today, Nvidia and Guild, and I had both of these stocks posted in BBT's chat room in my watch list today. Unfortunately, I started my day really bad with Nvidia trade and I'm going to explain why, but first let me walk you through why exactly I picked Nvidia today. Looking at the weekly chart, you could see a level around here, approximately a zone that was held for the past 4 months. The longer the level is holding, the more likely the breakout is going to happen with higher volatility, bigger move, and a better risk to reward and a more likelihood of having a continuation in these type of trends. So looking at this level and seeing that we broke on 8th of January, I decided to put Nvidia on my watchlist today, but it contradicted one of my rules. Usually I don't play after long bar candles, because after long bar candles, we tend to end up chopping up, and that's exactly what happened today, a little bit of a choppy price action. But I told myself that since we held for a long time below this level and we finally broke it, there is a slight chance that we might have a continuation today. So I ended up watching it, and I started building my position around the previous day close, having my stop loss below the previous day close. Unfortunately, I forgot to place my stop loss. It dropped down and I lost around 2 hours on this trade, or 2 hours and a half. Once I noticed the bottoming price action, I started building my position again. And I added finally with some momentum, recovering my loss and getting even more back to green. But my main trade was today on Guild. This one is way better than Nvidia, but it had a similar concept. You could see that Guild was holding around this area for half a year, from June all the way till December, and finally last week we're breaking this consolidation area, which is why I believe that the likelihood of having a continuation is really high. Looking at the daily chart, you could see that there is an ABCD pattern. We start the move on the 2nd of January, which is A, the high, which is B, on 4th of January, a pullback, which is C, 8th of January, and we close as a bullish candle, which tells me that today we're more likely going to go to the long side. Normally people ask me, how long would you hold on to your winner? That depends on the ATR. The average true range is $1.50, so you could easily hold it from 83.20, which is the beginning of the move, all the way to 84.70, which is up here. I ended up holding it for longer because the pattern on the weekly and the daily was strong, and I even left a little bit for a swing trade. Why did I play it? Looking at the 60-minute chart, you could see that there is a level around here, or a zone where we always get bought back from. That happened on 3rd of January twice, that happened on 4th of January, and there was a small fake breakdown on 8th of January where we broke to the downside, which is the level C, and we instantly got bought back up. At the open, I'm waiting to see that this area or this level is holding. And seeing that we sold off to this level on the 1st minute and instantly got bought back up or engulfed on the 2nd minute, I got the hint that this is a bullish engulfing pattern. A bullish engulfing crack is where you have a bullish candle engulfing fully the bearish candle. And I ended up playing it to the long side. Obviously, my entry was not ideal because it's a little bit somewhere around the middle of the range, which is in the middle of the chop. And I was afraid that it can resist, go against me, and get me stopped out, especially that I already lost a lot on Nvidia. So I decided to wait for a confirmation, which is the break of this area around here, and add to my position, moving my stop loss to the low of the entry candle. Now I have good position, really tight stop loss, and all I have to do is partial at key levels. This is the first key level I had, 84.50 on the 60-minute chart. This is the second key level I had, around 85. And finally, I went just for an extra push or an extra move past the ATR, leaving a small position for swing because I believe that this thing can go higher. So that's it basically. What I do in my trading, I select stocks going from the higher time frames, and then finally I look for entries based on smaller time frames, which could offer me a huge risk to reward ratio. Because I select my stocks based on the weekly chart and based on the daily chart, unfortunately I don't have the opportunity to trade every single day. I need these higher time frames to align, and sometimes it takes a little bit too long before they align. but that ends up really good most of the times, and that's why I feel more comfortable trading using multiple time frame analysis. I hope you enjoyed this recap. If you did, make sure to hit the like button, share and subscribe to our channel. If you have any questions to me, write them in the comments below. You can also follow me on Twitter or on X at AymanBBT, and hopefully I'll do more recaps until Andrew comes back.